final part of the program. Of course, continue that conversation on the bond markets with Larry Buluro from Chapel Hill, Denham. Thank you. Well, we finished up before the break has to do with whether the sovereign is crowding out the subnationals from the market. Then we have a bit of conversation on whether we're going to turn some treasury bills into dollar. Then, of course, folks says, look, we have a borrowing locally. What's your take on this?
I mean, given where yields are right now, yes, I mean, I do agree with some of the belief that we might be, crowding out a lot of borrowers in the market. But unfortunately, the sovereign options are very, very limited. So for them to actually go foreign borrowing, they'll have to go back to National Assembly. The whole process is quite very, tenuous, and could be convoluted sometimes and very, painstakingly long. So the federal government has needs. They need to finance those needs. So the quickest and fastest way for them is to come locally, and that's what we've seen so far. This whole plan of the $3 billion the federal government is looking to use to repay T-bills, I think that probably won't materialize for another, probably sometime next year. And what we'll probably see with that, we'll see less frequency on local borrowing, and we'll probably see yields, somewhat relax over the coming months.
Again, this last 64 billion came in at about 17%.
Correct.
Yes. And treasury bills around, I've seen yesterday, 20%.
Yeah, effective yield right now in the 20s, yes. Which is, so any corporate coming to the market will have to offer something, I mean, if you're coming, on a short-dated instrument, you have to come with something comparable to that. We've seen, corporates come to the market trying to do commercial paper. And any investor will say, listen, I can go to the market and get excess of 20% from the federal government. You need to match it, and they'll throw out the fact that the federal government it's a more stable, solid credit compared to a corporate. And we've seen very good, corporates who have a difficulty come to the market based on, and it's going to affect the whole financials if your interest payments are in excess of 20%.
These figures are high. Whether it's 17% or 20%.
Correct.
This is really high.
Correct. I mean, and listen, and we hear about, the whole notion about ease of doing business, right? This is one of the things that they need to look into, because this is not making things easy for corporates.
Yes, because if Lagos State, which is a Nigerian subnational, is borrowing money from local insurance and pension funds and others, and is still paying as much as 17% to borrow, that's not ease at all.
At all. So, but that's the nature of the environment we're in right now. We are, I mean, from what our research department is telling us, they expect interest rates to come down. We've seen inflation moderating right now. There's expectation of a positive GDP in our common numbers. I think once the macro story improves, rates will definitely have to come down. We've seen stability on the FX side of things, right? So it's a couple of things that need to come into place, and hopefully, coming year, you see rates come down.
You're the one doing the sales. So when you go around and talk to individuals, investors, what rate do you think you would like to borrow money?
I mean, it's
not on a personal basis. Okay. For a bond program like this.
I mean, so we are dependent on what the rates are, right? So whatever the sovereign is, we need to benchmark against that. But ideally, we definitely want rates to be much more lower. I think we'll all still remain in a double-digit environment, but I think I don't see why a subnational cannot borrow at 12 or 13%. And I think that would be ideal for corporates too. I think it would definitely be something that they can definitely will need to run their business effectively.
10, 12%.
I'm not saying that will happen, but I think ideally that would be a good number.
I like that.
No,
I like ideally.
Definitely.
10 to 12%.
Correct.
There shouldn't be anything more than that.
That's what it is.
Yeah, when it gets a little bit above that, it gets a little bit hot.
No, of course. I mean,
it's good to have you here. Larry Buluro, who is the Director of Sales from Chapel Hill, Denham, one of the investment banks, and of course, they are real asset managers, a bit of a financial services company. Let me just put it that way. Okay, thank you everyone for watching the program. Let's come together again tomorrow, Wednesday, the 16th of August, and continue the conversation from here. I am Bosin Omofaye, and goodbye from Lagos.